Unbelievable.
But his camera's off. Oh, now it's on.
Good morning. Good
All right.
morning.
We just cold
Oh,
opened.
We live?
The
Oh,
Wu-Tang
yeah.
Clan. 10 Killer Bees.
My understanding is it is nothing to fuck with.
That it's what?
Wu-Tang Clan is nothing.
Nope.
Do you guys both know that today is like a really big day on Wall Street? Do you guys know that?
It's my cousin's birthday.
Tell me why.
It's NVIDIA Day, of course.
Oh, I thought you were saying it was like the anniversary of like Lehman Brothers. Wasn't that like around this time? Oh no. Yeah,
that
right?
was September? I don't know.
Was that October?
I don't know.
It was a blur. There was a lot of bankruptcies then. A lot of IPAs.
Not IPOs.
No IPOs. Lots of IPAs. I was drinking a lot of IPAs at the time. I don't drink any now.
Oh, I hate IPAs.
Yeah,
I know, but me and Josh would go to Beer Bar over on 45th in Vanderbilt, right there, and we just like slam. We just like slam IPAs. We were drinking. What the hell was it called that we used to drink? I don't know. We were there all the time, and then we just be shaking our heads like, "What the fuck just happened today?" I remember one time we were going to a Knicks game, and like the CEO like left early to go to the gym or something like that, and he thought the market was down like 700 points or 600 points. That used to be a lot back then. And then like he met us at the bar, and he's like, "Man, what a bad day." And we're like, "What are you talking about? Fucking market ripped in the last 10 minutes, actually closed in the green." It's like, "Whoa, what?" Like that's how it was back then. Dude, the VIX was like, there were like 4 or 5% swings every day. That was just like a normal occurrence, which would be the equivalent of, I mean, shit.
A lot.
I mean, it would be like 10,000 Dow points or something like that. Do I have that math right? 7,000 Dow points?
Wow.
Something like that. I don't know. A lot.
VIX poised to hit its highest level since really the April sell-off. It's gunning for those highs from last month right now.
Can we
start the show?
We get this party started? Like, what are we doing here?
Yes, please. Morning, everybody. Happy Wednesday. Big show for us today. We got Blake Millard in the house from Sandbox Financial Partners. Riley Roseby will stop by. Kenny will be here, I'm sure. And as I mentioned, it's a big day. We got NVIDIA tonight. We got a lot of retail this morning and yesterday. We'll talk about that. And yeah, by the way, if you missed the video that Steve and JC did with Mike Hurley, it is now on our YouTube channel. So check it out. It was posted earlier this morning. And it was great. I enjoyed it. So great job, guys.
What'd you enjoy about it?
I like that. I like when you guys sort of become like the students in a way, right? Because you guys are like, you do a lot of teaching, but in that video, the roles were reversed, and you guys were the students, and it was just a nice perspective shift.
Nice.
Yeah, it was fun.
I enjoyed it too for selfish reasons,
No, I know that's why you do this stuff.
No, it was good. And I called Hurley. He called me back. Remember we called him in the middle of the show yesterday?
Yes.
Did he call you back?
He called me back like right after the show.
What'd he say?
Oh, I didn't answer.
So Harminder says, NVIDIA, yawn. Do we have that earnings table, the NVIDIA earnings table?
When was the last time you could say NVIDIA yawn?
Hold on, let's talk about it.
This is not the most important earnings release in the history of the stock market?
Well, we say this every quarter, right? But it comes at a precarious time for the AI trade. We haven't seen the whole AI theme in this vulnerable of a position probably since NVIDIA was reporting its Q1 quarter back in February. So I do think this is actually at least a bigger report than the past few quarters. You could see the reason he's saying yawn, the reaction has been very muted. The trailing 4 reports now. Maybe we get something tonight.
This is a great table. This is a great table.
Yeah, this is great. This is great. Who did this?
Beat report.
Sick. If you're not getting the daily beat report, I don't know what you're doing. Spencer, can you drop a link if anybody's not getting the beat report?
I have to go find it. Give me a minute.
This goes back to Strazza's roots, right?
Yeah.
I like old school Strazza. Old school Strazza is nothing like me. New Strazza is too much like me.
Earnings Strazza. So, but just look at the change in character, the way the biggest, most important stock poster child of this current bull run has been reacting to earnings. If you go back February of 22, or I'm sorry, February 23, May, August quarter, beating earnings in a big way, getting a big reaction in the stock price to the upside every time. And then that changed, right? Looking back, I don't know, August quarter of last year, that started to change. And now we're seeing far more muted reactions to what still, they're putting out incredible reports every 3 months, the same way they were a year or two ago. The market just likes it a little bit less these days. So is there signal there? We'll see.
It seems like people are going to be using this as like an event to extrapolate like the broader market sentiment, right? From like if Nvidia goes up tomorrow, or tonight/tomorrow, then it's all good. Then they're going to save the day, and if they don't, then we're screwed. I don't. That seems to be the mood out there.
Look at the AI. Have you been reading this stuff? I mean, people are really picking on Oracle.
Oh yeah, Oracle's underwater on their AI deal already.
Bad financing for some of these deals. But
what does that mean? How are they underwater so fast? Can you explain that to me? I don't know anything.
There are concerns about the leverage in the system, and I guess the way that some of these companies have borrowed to take on some just massive capital projects.
Yep.
And also, there's a big fuss about how they're depreciating a lot of this shit too on their books. Interesting.
So you're the former CPA here, auditor. What does that mean?
Michael Burry's like, those depreciation schedules are too aggressive. Look, Josh said, I'm not going to steal Josh's talking point because he nailed it. Yesterday, he said, somebody should ask Jensen on the call tonight, NVIDIA, if you were saying your chips basically go out of style in a year, how is it that your customers who are buying these chips are depreciating them over 5 years?
How should they depreciate them?
In 1 year.
Why?
If he's saying the chips are no good, are basically, you need the new ones a year later, then you got to expense them. So that's the kind of stuff that's being talked about for the first time. I think it's constructive, to be honest. Hey, and here's what happens too in the accounting world. This is new stuff. This is new technology. So you're not necessarily a bad actor if you're trying to account for it in the most favorable way. They just figure this stuff out as they go. So it's become a big conversation.
Okay. What do we say? What do we say? Do a little state of the markets.
Yeah,
sure. I can't. Let me just say, I fucking hate accounting. I reward myself after an hour conversation with Danny. I reward myself somehow.
Yeah. Accounting might suck, but uncovering accounting shenanigans, that is fun.
Yeah, but next to impossible this day and age. This isn't 100 years ago. Like, to actually commit accounting fraud in publicly traded companies is really hard. So if you're spending all your time trying to figure that out, good luck.
Yeah.
I mean, that's just how I see it. All right, let's get into something important. All right. Earnings. Like anybody gives a fuck. Let's go. Dow Jones Industrial Average up 70 points this morning. It's 46,250. S&P 500 up 0.25%, 15 handles, 68.54. NASDAQ 100 up 0.33%, 24,666 up 70 handles on the day. 30-year bond futures up a smidge, pushing 117 on the 30-year. Crude oil again hit this morning, down 2.5%, back to 59. Copper up 1%, 503. Gold up 1% at 41.13. Precious metals continuing to act well. Got a great chart today. Silver up 2.3%, 51.70. So impressive, continues to be. The volatility index still near 24, slightly down on the day. Over in funny money land. Bitcoin 91,400, down 1.6% on the day. Ethereum 30.75, down 1.5% on the day. Solana, after a huge day, down 2%, giving a little bit back to 138. Brings the total crypto market cap. Mr. Spencer Israel, 3.09 trillion, down 1.2 trillion off the highs as of yesterday. Slightly higher from now.
Still in the threes. So,
Wavy, JC, no, it ain't. We're in the golden age of fraud. Chanos teaches a course on it. That's right. And yeah, and I know Jim Chanos, and he no longer manages money. Right? That's how great of a golden age of fraud it is.
That's not true. He no longer manages outside money.
Right.
Right.
Yeah, like I said, good luck, Wavy. I mean, I love you, Wavy, but I mean, it's hard.
I think it's
impossible for me because I don't understand this shit and I don't want to understand. But like, come on.
I think it's actually a lot harder to commit fraud these days than in the past.
Thank you, Strazza. See, me and Strazza agreeing. How about that?
It'll happen, and it's maybe not hard, but it's relatively harder.
Yeah, it'll happen, but good luck.
Also, the public does a great job.
Yeah.
At exposing stuff.
Shout out to short sellers.
The internet has done a lot for that.
Yeah, for sure. It's crowdsourcing information as opposed to reading newspapers. What stands out from the futures this morning?
Not much. Shit bounced yesterday, really. Solana really dug in and moved higher in a big way, but like that was their big launch day for the ETFs. JC. So like you should expect it to, and not really holding those gains. So we'll see. To me, bears are still in control, taking more and more control, more and more areas.
Can you, a lot of relative strength in some of the same areas yesterday. Transportation stocks, biotechnology continuing to act well, metals continuing to act well, energy continuing to act well. Let's see what happens today. But some of the same areas that have been winning continue to win. Home builders, which have been the laggard, continue to lag, right? There's a lot of the same things, especially through yesterday. Let me ask you this. How does this stand out? Slide 5, please. So this comes from the Bank of America Fund Manager Survey. We're talking about all the relative strength in gold and in silver. Right now, gold is at 4,100 and change. This is, think about this. Only 5% of fund managers think that we're going to be above 5,000 next year in gold. Right now, again, 4,100. Only 5%. Woo! Gotta love that if you own precious metals. How do you feel about that, sir?
Gonna need to, cool off and digest these gains at some point. But yeah, it's been one of the more powerful trends in all markets this year.
And you don't think this consolidation that we've been seeing is enough? We've been consolidating. We're at the same levels we were October 8th. So that was
actually literally saying that last night. Like
6 weeks ago. So 6-week consolidation with an ongoing uptrend.
That's not very long. That's not very long.
I was literally saying on the call last night, I said, I would love a little more sideways here.
Yeah. Listen, I said it, a month ago more. I'm like, listen, the strategy here in precious metals is to watch where the relative strength is. Yeah. Right? During this correction, which stocks are holding in the best? Because those are the ones we want to own. And I see this fund manager survey, only 5% of these schmucks think that the gold is going to be higher, above 5,000 next year. I think they're underestimating precious metals, as these fund managers do. As a reminder, not hating, just math, they're the worst investors in the world. The worst investors with the most amount of money to lose on the planet. We have the data. I'm not hating on anybody. It's just facts. Worst investors with the most money to lose in the world. None of them think gold's going to be above 5,000 next year. How do you feel about that? Do you think the worst investors of all time are going to be right this time, or you think that, as usual, they're going to get it wrong?
It could keep melting up.
Forget this. Where do you think we finish up the end of next year?
I don't really have an opinion on it. I have no edge here when a trend is this extended.
Keep it real. What do you think?
We were sharing, do we have those charts? I'll show you what I think. The percent from 200-day chart for gold. It's just, historically speaking, going back forever and ever since the beginning of time. If you sold gold when it was this, this much of an overbought extreme, you're probably pretty happy you did so looking out 12 months. Do we have that chart?
The gold percentage above the 200-day. It looks like it's coming up. Silver hanging in there around 50. Also super impressive. Super, super impressive. I got another one. This is a good one. Throw up slide 6 there. So this one also coming from the fund manager survey. Can you guys throw up that slide 6? So this is consumer discretionary. As far as the percentage of global fund managers who are overweight consumer discretionary. They cut their allocation to the consumer stocks at the fastest rate of all time, or on record, which goes back over 20 years. They're hating consumer discretionary. That home builder, situation probably is a big part of that, right?
Tesla's probably a big part of that.
I mean, Tesla's a massive outperformer. I wouldn't say that Tesla's a reason that they're cutting discretionary.
Outperformer this year.
Yeah, massive outperformer this year.
Relative to some of the train wrecks out there, sure. It's not a train wreck.
Tesla's the opposite of a train wreck. It's pushing up against all-time highs.
Tesla is down on a relative basis versus the Q.
Tesla's flat for the year. Tesla's flat for the year, but think about it from the April lows. Right? Okay. Tesla's outperforming everything. Nevertheless, I don't think Tesla is the reason they're getting out of this. I think that some of these retail stocks, I think that the home builders, the home builders gotten crushed. I think that's really what it is. And then here's the last one. Throw up slide 9. And then we'll get back to the precious metals conversation. This one is energy. Slide 9 there, energy. This is the percentage of fund managers who are overweight energy. Can you guys throw that one up? There. So you can see the blue line is the actual is the relative performance of energy stocks, right? So this is energy relative to the rest of the market. And in the light blue there, that Columbia blue, that North Carolina blue, that is the net percentage who are overweight energy down to some of the lowest levels ever, where we could see here on a relative basis, energy tends to bottom out when you see this. So I guess we'll see if this time's different or not.
Wait, I'm just trying to understand what this is saying. So
it is saying that the percentage of fund managers who are overweight energy.
I get that. Yeah, but I'm trying to quantify what this is saying.
They hate it. It means they hate it.
They hate it. And when they hate it historically to this degree, energy starts to outperform.
Wait, so negative 30% what? Of fund managers? What?
This is the percentage that are overweight energy. So I guess this is the rate of change. This is the I guess we're looking at it across.
No, it probably means that 30% are underweight.
Oh, that makes more sense. That makes more sense. Yeah.
Nevertheless, not a surprise they hate energy. That's really the point here. How do you feel about that? You want to show what's going on with precious metals? So getting back to the metals. So silver hanging in there very impressively. Only 5% of fund managers think that gold is going to be above 5,000 next year. Right now it's at 4,100. So that would be 25% move ish.
So, if you have the longest term view at gold right now, it's probably a good place to feed the ducks and take some profits. If you've been here, if you've been in this trend, since the breakout freaking 2 years ago, you've done really well. Just saying, historically speaking, good time to sell, not buy. No? Do you like my chart?
Do I like your chart? Yeah, it's all right.
All right.
This is this is good. I just for me, I used to make a lot of mistakes early in my career where I would draw like trend lines, like connecting peaks,
Yeah.
And I left a lot of money on the table because of that. So I just don't love.
There's no trend lines here.
No, I understand. It's because listen, we're not all the same,
yeah.
Right? I'm not built. I'm not built like you.
Last one. Just let the people see it. Go back to the gold one. Just leave it up there for a second. And that's actually, not gold that Michael Saylor is wearing around his neck. That's actually a physical Bitcoin.
That's a physical Bitcoin. I didn't know they made those.
It's Bitcoin. That's not gold. That's Bitcoin.
All right. So what are we thinking about this Michael Saylor situation? Is this going to end badly?
I still don't think yet. If it does, I'm going to be pissed because I'm not short enough.
How do we feel about all these shenanigans started when he was the Bitcoin alchemist on the cover of Forbes? Remember that?
Yeah, he was doing so great just this time last year.
I got a good one to address. Healthcare stocks up across the board. Listen, I don't know what's going to happen with energy. I don't know what's going to happen with healthcare, or transportation, or metals, but
more and more is working.
My entire portfolio was up yesterday. Now down 500. Right? We'll see what happens. moving forward. But that's how it was yesterday. But let me just address some things. So people were like, "Oh, healthcare's outperforming." So that is, just like it was earlier this year.
It's the
when
defense.
Stocks fell.
They
right?
say it's the defense, JC.
Right, but here's the difference.
Yeah.
Healthcare is outperforming now, just like it was outperforming as money was coming off the table earlier this year. But if you go to the next chart, there's a key difference here
Market go down.
what is happening in healthcare. Is that as the S&P 500 and healthcare as a whole was outperforming before that correction earlier this year, biotech was already completely falling apart, right? Biotech completely falling apart. Now with healthcare outperforming, biotech is leading. Healthcare is underperforming biotech. Biotech is making new highs. I don't see anything defensive about biotechnology. So I don't know what the market's going to do. I don't know what's going to happen. I don't know if breath is going to deteriorate. I don't know what's going to happen. All I do know is that this time is not like last time.
Hey, buddy, I got to tell you, you still got it. Okay. This is next level thinking, right? Okay. He dug in here. He went a little deeper, and I would poke and say, biotech. If you did this same analysis, I think with pharma and some of the other subgroup indexes, it would show the same picture. I'm picking up what you're putting down. I love this.
Wow. Steve Strazza. Wow.
Maybe it's
right.
different.
I appreciate the love, sir. I appreciate the love. Everybody in the chat, you guys seeing this?
The indexes could still catch lower, right? Like they did back in Q1, Q2.
Yeah, like I said, I don't know what's going to happen. All I know is that I have 17 stocks in my portfolio. 12 of them were up yesterday. A few were up 3-4% on the day. I had very few losers yesterday. I don't know what's going to happen.
Yeah.
I'm not laughing at the trading gods. Trading gods, if you're looking down upon me, I'm not like saying, "Hoo, ha, ha, I'm so great." No, none of that. I'm just pointing to what is happening, and that it's just interesting, the rotation taking place underneath the surface. Respectfully to the trading gods.
Is
Great chart.
Is this trade offensive or is it just offensive?
Let me ask you something. I see what you're saying there. In a meeting that we had a few weeks ago, I asked the question. I remember I was at the mall. I was at the King of Prussia Mall, which is a fucking awesome mall. And I don't know anything about malls.
It so much.
Dude, this place is ridiculous. And so I'm in the parking lot of the King of Prussia Mall in our meeting, and I said, can biotechnology serve as a defensive trade? And you guys all very adamantly said, no way, Jose, JC. There's nothing defensive about biotechs. I said, okay. When was it that I was at the mall? Wasn't that long. I mean, it was like a month ago.
You said, I don't know. A few weeks ago. I don't
know. Anyway, so that's what I'm seeing. That's what I'm seeing out there in the market. Overall.
I don't know. A lot of times it's a question. Is it defensive or is it just uncorrelated? Right.
There's some of that. There's got to be some of that. There's got to be some uncorrelated nature to it for sure. It can't just be all offensive. I got one more thing. Can you throw up that tweet, slide 5 there? So this comes from Jim Cramer. So Jim Cramer's a guy who used to manage a fund. He wrote a great book, Confessions of a Street Addict. I think now he does like a television show for, like for elderly folks later on at night.
What's the destruction? Who's destruction?
Nevertheless, Jim Cramer saying, even after all this destruction, we are not oversold. So my questions to you are, number 1, what does he mean by destruction? And number 2, who is we?
Oh my God, what happened? What destruction?
Yeah, what destruction?
You guys know we've talked about this. We've talked about.
Is he talking about crypto?
He's talking about the quantum stocks. Talking about it's
been bad.
Yeah, the juicy stuff. He's talking about
who's we?
He's talking about MicroStrategy. He's talking about D-Wave. He's talking about those guys.
Got it.
D-Wave.
That's what he's talking about. All right.
Yeah.
Spencer dropping.
And then who's we?
We is the market.
We is the market. Got it.
We
like
is
Earthlings.
Yeah.
Earthlings are not oversold. All right.
That's
I
a
want to
fair
give a big
point.
shout out to Jim Cramer.
That's a fair point, though.
Love Jim Cramer. Jim Cramer, big fan of technicians out there.
You ever look at that stuff, though? Right?
What?
Like, I'll look at RSI in a time like this where it cracks a key level and it's getting close to oversold, but not quite. And I'll think to myself, yeah, there could be There could be another splash lower, right? We're not even oversold yet. I think that's
I was looking at
way to
Ethereum yesterday morning with Solana getting oversold, Bitcoin getting oversold on using a 14-day RSI. Do you think that Kramer uses a 14-day RSI, or does he strike you more of a stochastics kind of dude?
Maybe like a 14 weekly, you know?
I don't know.
Yeah.
I don't know.
Can I bring Kenny out?
I think we should.
Yeah.
I think we should.
Yeah.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Oh, Kenny Glick in the house. How are you, sir?
Fibonacci. Kenny showed me Fibonacci back in the day. I didn't like it. It's crazy, this Fibonacci stuff. What's up?
You know, one of my favorite bits is when you're walking through the charts, you know?
Yeah.
That's the best.
Walken used to do a lot of Fibonacci. Yeah.
Yeah.
Like, that was good times.
Yeah, no doubt. Just said NASDAQ Poppy. JC was pumping fart coin 2 weeks ago. I own no fart coin. I haven't owned fart coin in a long time. It ran out of gas. You know, it's really,
I see what you did there.
it's really become a real stinker, that fart coin.
Wah, wah. How those NFTs doing? Those still a thing?
I'm flat. I bought some I bought a CryptoPunk on Friday. Let's see how we're doing. I am down 5%. All right.
Oh man. Speaking of things I don't really care about, I went on to Discord for the first time yesterday.
Is this a NOS thing?
No, our pal Don Corleone, which we're gonna do our podcast live today. So big day, big night. We're gonna just keep the room open for the next like 72 hours straight, and I'm gonna just take steroids and some sort of cocaine mist, and I'm just gonna keep rocking. We're doing
do those bath salts that Strazza was telling you about.
No, do the sniffing bath salts.
Yes,
you ever try them?
Yes, all that stuff. Yeah, the zombie ones where you go zombie.
No, not real bath salts. The ones the football players do.
No. Yeah, you smell them. You don't eat them. I think the problem is these folks were eating them.
Oh, you could if you ate these, you'd probably die.
Didn't the FDA have to come out with an ordinance saying, please don't eat the bath salts? Remember that? That was like a real thing.
Yeah.
I think it's just like you're smelling dried urine is all it is.
It dried urine?
Yeah, it's like ammonia. Anyway.
I just got the Tide Pods. There, and Strazza, nice to see you. I got one chart for you guys. You got to see this. So let me and we'll talk more about what's going on tonight because it's a big night. This chart right here. My friends. So the market's selling off finally, right? And wouldn't you want to know where it's going to stop selling off and maybe cover and go long? Take a look at that. That's a 90-day VWAP on a 20-minute chart, right? And look where it went. This is a $600 ETF with 100 of the most popular stocks on the planet. Yet it goes to an exact price yesterday, and that's where it finds some support. That's VWAP, my friends. And it was fantastic. And if you look at it on an intraday basis, when it bounced off there, that was that level right here. And then we rallied back to the prior VWAP to the penny as well. So when you've got, and again, we had this brief discussion yesterday, the market's rigged. But if you accept that it's rigged and you have the rigging, then it's a fantastic thing. It's not a negative thing. It's great. The word manipulation, I love that word too. Let it be manipulated because we have the manipulation. And when you're trading VWAP, my friends, you will no longer be the manipulated. You will be the manipulator.
Oh, I like that. Now that's a quote.
Thank you. Thank you. My name's Kenny Glick. Thank you. I've been here for a while. So, just looking at some Target and seeing TJX today, but I'm going to be looking at the metals, not the silver and the gold, but the rare earths. They got a little pump again. So coming off some ground there. USAR, big fan of this one. It's been trading really nicely. Obviously MP. And, again, because they're gapped up already, I'll be looking to play the fade, and then maybe we'll find some buying. But I'm really concerned about tonight. I think we're going to get an Apple kind of quarter like last in August where we gap up and we give up the gap. And that might frighten some people. I still think this market's going to test yesterday's lows, give way, test those 3 week ago lows, and then you guys can have your bull market back. I still want my 18 points to the downside. I'm holding on to that. So tonight, what we're going to do is we're going to do the podcast right into the, right after the NVIDIA earnings. And then we're going to schmooze tonight, an impromptu schmooze, an emergency schmooze. NVIDIA is that important that I want to, introduce you guys to how we plan our attack for options. So if you guys are around tonight, I'm opening up the website all night, basically from 7 to probably 10 or 11 o'clock. Maybe our DJ shows up and then we party. And then the next morning, I'll show you how to trade some options. So I'm excited. I think it's going to be volatile. I think Nvidia is going to gap and then roll, and the market's going to go down with it. That's just my thought.
So you think gap up and roll?
Yeah, gap and roll. So great numbers as always. Maybe a 4 or 5 point pop. Maybe wake up to see it up 7, and then it's going to give up the 7, wind up closing down 3, scare the shit out of everybody. Q's down about 14, UVXY at 14, and we're just kicking some ass on some shorts like we have been over the last couple of weeks. And then I still think this market's going to bottom out, trap everybody on the wrong side, and rip into the close. Let
me ask you this, Kenny. What if Nvidia gaps down? How do you change your approach?
If it gaps down, then I just completely flip it, because if it's gap down and you faux show bro, it's going to be the greatest long trade of the year. And again, that's how you got to be able to react. So gap up, rollover, very negative. Gap down, buying, very bullish. So that's why it's so damn important, because however Nvidia goes tomorrow, so goes the Qs. And of course, the QQQ is my market. I'm more of a Q guy than a SPY or Diamond now.
Perfect.
And that's my plan. We'll talk more about it all night.
You just said SPY or Diamonds. You're the only person I know who's ever traded those things.
Yes, nobody knows diamonds.
People think diamonds. They think actual diamonds like jewelry. No.
Right.
He means the Dow Diamonds, DIA. It's an ETF that tracks the Dow. It makes Spencer's head explode, the fact that even exists. He hates it.
Yes. And speaking of the other metal, still buying silver, my friends. Just got myself an entire collection of I bought one of every silver eagle from, I got the proof set, got these from some of my nephews and nieces. I got them collecting the right thing now, and I just bought a ton more. So I love silver. I think if it stays above 50 for the next 3 or 4 months, we can really get to $80 on silver. So hi-ho silver.
Yeah, 80. I like your target there. That makes sense. I love it.
All right,
Spence, you have something to add?
No, not really.
All right.
I heard my name, so I was summoned. But no, Kenny,
we'll
just
catching strays.
We will see you in the open house, which is starting, I guess, in a few minutes, and then tonight for the schmooze.
Right. All right, guys, and it's been a really great time. I hope you guys are enjoying yourselves. Seems like everybody's making money. There's not much going on this morning. I think it's kind of be a boring day. So ask questions, and remember, tonight, all night, we're going to be going. So strap in and take a nap in the middle of the day.
There is the link on the screen for the schmooze. For the open house, which starts, I guess, right now or in a few minutes. So.
Right on, yeah.
And then, what I like, put on a trade with Kenny. Like, literally, just go in there. Kenny's buying the Qs or shorting the, open or whatever. Put it on with him. Take the profit, get stopped out, put on another trade, take the profit or get stopped out, put on another trade. Go through the motions. It's great. It's the only way to do it.
All right. I'll see you guys in the room.
Adios. I like how that sounds. Put on a trade with Kenny.
I would love to complain about something. Just came across the wire here. Blue Owl Capital is calling off private credit funds merger. Stocks popping a couple % here. This was a great short for the current environment. It was like the epicenter of the sell-off and all this like AI financing bullshit that we're talking about. Completed the cleanest top, bought puts in it a couple weeks ago. Got a double, slow moving. Now it's ripping back in my face. I'm going to make no money on this trade. Shorting is so fucking hard. It's absolutely ridiculous. Even when you get it right. I mean, some of these trades have just been hard to put on.
Shorting is short-lived and you're going to die. I don't know if you heard.
Half of these companies are hard to borrow. It's like, I don't know how people fucking do this. This is why you're better off just playing golf and moving to cash. Seriously. I learned this lesson over and over again every cycle.
Steve, this is turning into your white whale stock. You know what I mean? Where you got like a vendetta against it. I feel like.
You throw up. I know we got Blake in the house. Can you throw up slide 3 there?
Look at this.
I don't know if you guys saw this. No. There it is. Yeah.
Fuck.
So how much is it up pre-market?
A couple %. I'm in 14, so I got 2 days to go.
Yeah, it's up almost 3%
now,
on the day.
Not in the money anymore. It's ridiculous.
Well, it's also information. We'll see what happens, but it's information when bearish patterns cannot complete and confirm that, just like it's not bullish when bullish patterns can't, complete, right? So let's see how this shakes out.
You got
throw
to
up
be
that
quick.
slide 2 there. I thought you'd find this interesting, Strazza.
Yeah.
Breaking news here.
What?
Your boy Larry Summers announced he's resigning from OpenAI's board amid the release of his emails with Jeffrey Epstein, which, to me makes me think, like, just how creepy does somebody need to be too creepy to work at OpenAI, Like, this is pretty nice. You got to be, like, on a whole nother level of creepy, right?
Yeah, I'm with you.
Too creepy for OpenAI? All right. I mean, that must have been some shit. I can't imagine what was in those emails because,
I read a couple of them, and, like, they're, like, I guess somewhat innocuous, but that's not the point. The point is you shouldn't be emailing with the pedophile. That is the point, right?
Yeah.
So at what point does this company just, like, have to come public because it's just in, like, public interest for there to be more disclosures and more transparency here? Also, by the way, there's way too many owners for this company to still be private. A lot going on there. Can't imagine being their accountants.
Is the IPO really going to be $1 trillion?
It's going to be at the top.
That's crazy. It's going to be the top. Whatever the market cap is, you fade everything.
Yeah. So I guess take your time, OpenAI, but they have to come public soon. This cycle, really. Let's go.
Yeah, there have been
$1 trillion non-for-profit. Great.
Yeah, there have been reports. Second half of next year, Q3, Q4.
Yeah, so we need to see what's going on over there. Yeah.
Listen, I don't know how much of a scam it is, but I do agree that it makes sense that for, to hire the best talent, you can't be a non-for-profit, because why would talented people want to work there? They want money. So you have to incentivize them somehow. So it can't be a non-for-profit. So I get that aspect of it. The rest I don't understand.
What is this pedophile's name again? I'm long the Okilo puts. That's his other company.
Good.
Okay, can we bring Blake on? Enough of this.
I think we should. We should.
I'm tired of talking.
No more pedo talk. No more creepy talk.
This is too much for one day. I can't.
Yeah, it's enough.
I can't.
It's enough. Bring on Blake. Bring someone sensible.
I'm trying. We got to. You know what? The bumper is not going to play. Blake, just come on. Just rip it. Just cold open style.
Oh,
there he is. Forget
What's up, Blake? Oh, we got to unmute him. Blake. I like his office, though.
Yeah, look at that.
Blake's office, very nice.
CFA Institute.
No, you're on mute.
I've heard of it.
You're still unmuted. Yeah, got the CFA Institute there.
First timer.
Yeah. Why don't you leave and come back, Blake? All good. No worries.
Leave and come back.
Yeah, get that sucker going. Test those
support.
mics.
Tech support.
If you're gonna come on the show, guys listening out there, make sure you test your mics, right? Life is short, right? Life is short. We got a YOLO. What are you YOLOing today, Strazza?
Nothing really.
You're not gonna YOLO anything?
We bought some China yesterday. Not sure how we feel about
China, eh?
It was aggressive. Talk about jumping an entry. There's barely anything there. We'll see. What was holding in there yesterday? Transportation, biotech, healthcare, utilities, healthcare, energy. But giving back today now. Looks like
a little bit. Mr. Blake. Nope. Still nothing.
Jesus, Blake.
All right. Well,
you're better than this.
Yeah, get him out of here. Stick him in the bathroom.
All right. Well, we have more charts. I mean, we could talk about it. I mean, where's your head at with these? Are they tops or not in financials and industrials? I think these are such important charts at really big levels. I don't think bulls want to lose these groups even in the short term.
Financials pushing up against those February highs right around that area. These are also the November highs on the XLF. That's a big one. XLK around 280. That's a big one. XLC around 112. That's a big one. Discretionaries are already convincingly below their highs from the prior cycle from the end of last year.
What if I told you speculative growth stocks were in a bear market the other day?
I would say that is not how the market works. The bear market and bull markets are a function of the environment. Specific industries and stocks don't go into their own bear markets like a vacuum.
I don't know what to tell you, sir. I saw a headline. ARK Innovation Fund was down 20%.
If Charles Dow was here right now, he'd tell you you're an idiot.
On an intraday
I'm not going to tell you that, but that's what he would say.
And they were blasting it out, getting all the clicks, probably. I don't know. Bear market for the risky ones. At least.
That's not what it is. That's not what a bear market is. That's not what a bull market is. In bear markets, the majority of stocks are falling, making lower lows, lower highs. The majority of sectors are falling, making lower lows, lower highs. The majority of countries around the world are falling, making lower lows, lower highs. That is what a bear market is.
Dollar higher again today. Characteristic of a bull market or a bear market? Is the dollar?
Depends on what decade you're referring to. Like in the 90s, for example, the dollar went straight up in the back half of the 90s.
Does the dollar concern you? Does this tactical base in the dollar index concern you?
You know, what's really interesting is how well emerging market currencies have done. You know, so when you talk about the dollar, you know, you have the dollar index, and you've got the euro and the British pound, Japanese yen, Swissy, right?
No EM. None.
Right?
Zero.
So when we talk about the dollar, it's like two different conversations. It's like, do we think that foreign exchange currencies like Forex markets, their currencies are appreciating or depreciating relative to the United States dollar? And there's a couple of different ways to look at it. And this is a fantastic chart. Here in green, we're looking at the United States dollar index, which is 60% euro, and then sprinkled in some yen, CAD, Aussie, right? And then you've got the emerging market currencies. Now this is inverted, so showing the dollar weakness. So as this line goes down,
higher.
This is the dollar relative to emerging markets, which is still in a downtrend. So, you know, when you talk about the dollar, you know, I don't know if this is right or wrong, but I lean towards the emerging market currencies because they're way more sensitive.
Dude, yeah. I like
and more equally weighted. There's 14 of them down there. In the green line, it's 60% is euro.
The truth is, it's probably a fun discussion to have. The truth is, Dixie's going to be right sometimes. EM currencies are going to be right other times. It's similar to saying, you know, who's right for the broader stock market? Is it the NASDAQ 100 and all the biggest and best stocks and the Magnificent Seven, or speculative growth and the risk-on areas, right? Isn't that the same sort of analysis?
Yeah.
So it stands out for sure. Dixie back in the hundreds, starting to look like higher dollars, at least versus the developed countries.
I got to see it. You know, you're not wrong. Like, I'm not disagreeing. I mean, the dollar's been in an uptrend for, when did the dollar index bottom? At the end of June. I was at the end of June. That was a long time ago.
It's already been some time.
It's already been some time, and it's been making higher lows, higher highs, which is really interesting. But you're not seeing that in the emerging markets, which is really interesting. So there's that VWAP from COVID. I think that's a great line. Also, a lot of support and resistance at 100. Also, psychological level at 100, right?
If you're not a believer in the VWAP, I mean, this indicator, fully versatile too, by the way. You could do it on futures markets. You could do it anything with volume and price. So right here, you could see it. I mean, you can't just deny this is a powerful indicator. It's acted as resistance and then support and then resistance again at just key turning points, key inflection points in this trend over the past several years.
I think Kenny said it best. When you trade VWAP, you no longer become the manipulated and you become the manipulator.
Oh, look, he's right. It's the ultimate cheat code in technical analysis, if you ask me.
Well, you know, it's actually a real number because it's telling you what the average investor is doing and whether they're profitable or they're not profitable from any point that you want. And you know what's really interesting is one of the things that we know for a fact in bull markets, in uptrends, the people who own that asset are making money, right? And a lot of people, there's the book Anchored VWAP by our friend Brian Shannon. Get him on the show. Get him on, Spencer.
Lonnie Shiva says Shannon's book on VWAP changed my level of understanding charts. Me
too. Fantastic. So think about it. And you know, people are like, "Oh yeah, no, duh, JC. People are making money during uptrends." Yeah, thanks. Yeah, but think about what that means. In uptrends, people are making money. So if you reverse engineer that and figure out when people are making money, that determines whether it's in an uptrend or not. You see,
that's right.
You're flipping that on its head. And then so the anchored VWAP allows us to do that because if prices are above the anchored VWAP, then we know the average buyer on a volume adjusted basis is profitable, which is what happens in uptrends, you see, right?
Did CMTs know about VWAPs in the 80s? as soon as electronic trading became a thing, I'm sure VWAP wasn't far behind in some way or another.
Brian tells the story of the history. He's gone there. He's gone back. You know, he would.
Right.
You know, I remember him going down to the New York Stock Exchange, hanging out with Jay Woods, and him calling me and be like, "Dude, they're all using it."
Yeah. Yep. No,
This
I've
is almost
seen it.
20 years, maybe not 20 years ago, but a long time ago.
I've seen it. It's true. Powerful indicator. Good stuff. Good stuff.
I read his first book in the summer of 2008.
Yeah.
I was on my way to. This is as energy is. This is energy when energy was peaking.
Yep. Yep.
In the summer of 08. Energy still at the same price. Energy sector XLE still at the same levels as it was then. And I remember I wasn't friends with Brian yet, but I was a fan of his. And I was on my way to Italy and I needed something to read. And I'm like, oh my God, can you send me, you know, your new book, you know, faster so I can get it for the plane, blah, blah, blah. And he personally mailed it to me. And I read it on my way to Italy.
Just world-class guy.
Yeah. Are we buying anything in Latin America?
No, not today. Not today with the dollar ripping. I like PBR, JC, but I like it on a green candle.
Not the Pabst Blue Ribbon, but the Petróleo Brasil.
Well, I like both of them, to be clear.
You like the PBRs?
Yeah. You know, have some fun, live a little. I remember college.
Dude, PBRs didn't come to Fairfield University until like I was, I think a junior or a senior.
We had them.
And then they were $10 cheaper than the Busch Light kegs.
Yeah.
So, which were only like $50 at the time or $45 at the time. So we were able to get PBR kegs for $10 less. So essentially, if we got 3 kegs, we'd get a free one.
Yeah, and still delicious. Really good stuff.
Yeah, delicious is a strong word, but yeah, got the job
back
done.
then, you know, tougher times. Couldn't afford the Coors Light. Now we're living large, right?
I remember my dad came to visit once, and he bought us a Rolling Rock keg. And it was like
special day.
It was like a special day. It was expensive. It was like 80 or something or 70. It was like such a premium. My roommates were like, "Whoa, big spender!"
All right, we got Blake here.
Nice.
Bringing him out.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Blake.
What's up, gentlemen?
Oh, look who decided to join us.
How
are you, sir?
Doing well. How are you?
You know, just, figuring I got some money to put to work, saw some relative strength yesterday. It's got my attention, kind of seeing how things shake out today and the rest of the week. How about yourself? So not everybody knows who you are. I don't know if they're, living under a rock or something, but, I think it's important for the folks to understand your perspective and how you approach the market. You want to let them know what your day job looks like?
Yes. So I am the director of investments, which means nothing. I am the portfolio manager for an RIA. We're based out of Bethesda, Maryland. We manage people's money all across America. We have young clients, old clients, institutional clients, annoying clients, great clients. But just like inherently, we are obviously going to be much longer term. So like for your audience, we have a little bit longer of a time horizon. So yeah, like markets are wobbling here near term, but like for someone like us, we view that really more as opportunity. So like recently, excitement over any AI related announcement is now being replaced with skepticism about like spending plans and, ROIs on that. Fed officials are casting doubt on a December rate cut. We've got these elevated multiples that are sort of taking oxygen out of the market. So like there's definitely been this change in market character. And, we pay for All-Star Charts. We follow Mark Newton over at Fundstrat. We pay with Renmax. So we're watching what Jeff is saying. So like we're aware of all of these technicals that are starting to really deteriorate. And we pay attention to that. We don't always necessarily act on that. But, last night I went into DC. Barry Ritholtz was doing a live taping of Masters in Business. And he was interviewing this gal who used to work with Bill Miller for like 20 years. And now she's stepped out into her own firm, Patient Capital Management. And I think it was Dan Rousseau. I couldn't see. It was the back of his head. but I think it was him because the question was straight technicals, and he was asking a fundamental person about, how you step into positions, how you step out. Can they confirm? Can they, do they conflict at times? Like, how do you think about that kind of stuff? And her response was similar to what we would view, where if we feel like we want to get out of a position or we want to lighten exposure, and again, these are like more fringe, these are retirement accounts. So we're not making like 20% moves at any given time. But if there are periods where we want to say like take down or increase exposure for equities, like maybe 5%, we will absolutely look for technicals to sort of confirm like a reasonable exit point that might be in price or in time. So, I mean, there are times where they line up, and then there are other times where they might not. We might really say, like industrials, but just where it's trading, that might influence just, okay, we like this. We're just going to pick our spots. We're going to be patient, that kind of thing. So, like I said, our clients are much longer term in nature. So we always are trying to understand what the market is saying short term. We use a lot of fundamentals, but we overlay technicals with that. But really, we're just trying to like make sure that we keep our eye on the prize, which is more longer term in nature. So like our time horizon is probably more like 9 months, maybe 18 months out. It's kind of like trying to figure out where the greatest probability of like the market is going over that time frame.
Can we talk about, I want to talk about valuations and the bubblicious. I know you got some stuff from JP Morgan here, some stuff from Ned Davis. If you throw up slide 24, can we talk about the valuations and then the non-bubblicious nature of the market?
Yeah, let me get this going here for you.
Yeah, slide 24. There it is.
Go full screen.
Here, can you see it on the screen?
Yep.
It's already up
now. Yep. Yeah, so this is a really important point. So I understand like traders don't really need to learn or worry about this stuff necessarily like in real time, but I can tell you, with great confidence, any institutional investor I would talk to or allocator of capital, they will tell you that these types of things really, really matter because again, their time horizons are much longer. And the one thing that we know about valuations is your starting point is extremely important for forward expectations of returns. So, short term valuations and prices can obviously disconnect. That happens all the time. But over longer periods of time, years and decades, the market will generally follow the course of, where earnings and valuations go. So this is going to be problematic for the market. This is obviously looking at earnings, but you could look at price to book, sales, cash flow, any of these metrics, and they all say the same thing, that we are at the upper end. Now, that doesn't necessarily mean we need to sell or go to cash, but I do think that warrants more caution and probably more muted returns, at least in the short term. So obviously a multiple like this, there's two ways. There's the numerator and there's the denominator. So prices have really, really run since those Liberation Day lows. So we've seen the expansion of the multiple that you can clearly see on your screen on the very far right of this chart. But then it's also an earnings story, and earnings have really been strong. This third quarter was absolutely fantastic. I brought a bunch of data if you want to go through it, but long story short, like the beat rate was incredible. We're at double earnings. Everyone thought that this was going to be the quarter in which we would finally see the pass through from tariffs. And here we are, we got double digit earnings. You guys are looking at, slide down a few to the fund strat chart that says stellar quarter at the top, third quarter, 25 year over year earnings growth.
This is great.
So essentially we came into the quarter looking for 7 to 8% earnings growth. And where did we end up? We ended up closer to 13%. So that's like four straight of double-digit earnings growth. And if you go to the next slide, this is like really where the rubber meets the road, especially with valuations. You want to look at like those lighter grayed out blue bars. This is where a lot of people also have a problem with valuations is, can we actually deliver again for like, 3-4 years running of these double-digit earnings growth. So if we can, that's wonderful. But delivering another 13-14% with all of this uncertainty and around trade policy and tariffs, and now it's in the courts, that obviously acts as a headwind to earnings. But you want to see those earnings continue to drive higher, because that's what helps stabilize that multiple. So even if prices don't scream higher, like at the index level, and maybe we don't rip to like 8,000 on the SPY, we can still get there eventually. We just need to see some of those earnings come through.
Can you throw up slide 25 where you're talking about the Mags 7 stocks? They're expensive, and so are the 493.
It seems to me that people have stopped comparing current valuations to any sort of average or median valuation metric, and are now just going straight to comparing valuations to, well, at the dot-com bubble highs. Are you noticing that too, from a sentiment perspective? That's kind of interesting as well.
Yeah, I think, again, when you look at these valuations, you could look at them like we were at that previous JP Morgan chart, where it's just like a static, like you're just looking over at history. And I don't know if that's necessarily a fair comparison, because markets structurally just change throughout time. So like you have to understand like profit margins, leverage, credit quality, sector composition, like these things you all guys know that like these things are living, breathing organisms. They change over time. So like anchoring to today's multiples as the new normal, rather than like expecting mean reversion to some sort of bygone era, I think is probably the better way to think about it. And you can adjust the multiples based on these metrics. So to your point, like on the right side of your screen, you can essentially just like tease out the Mag 7, because we live in a market cap weighted world. That's what's driving the indexes. Obviously, it's going to be a huge part of earnings, but you also need to like understand what's going on with the rest of the market. So those valuations are just fine. You can look at the left side of your screen, which is looking more at like the median number. So again, that's like what your just average stock would be. So like the valuation is skewed again by the Mag 7, the same way the concentration is, the same way the earning, the growth and the driver of market returns. You guys probably all saw that piece by Sunbliss from JP Morgan, whatever that was, maybe like 2 months ago, that essentially since the moment ChatGPT was announced, what was that, November 2022, maybe? Was it 23? In any event, like the market's return, 80% of that is basically coming from the AI trade. 90% of profit margins are coming from that. Like he threw out like another, like some absurd number, 75% or 80% of all CapEx is driven by this build out. We know that we can see that in the real economy too, because the first half of this year, when you look at GDP, all of the growth was essentially these hyperscalers dumping tons and tons of money into this build out. So where does this all go? We all know it's going to be painful. There's going to be some sort of bubble. There's going to obviously be a pullback. I think to think otherwise is naive.
Tech stocks account for like half of the corporate profits in the entire market.
These are like absolute machines. And the market was fine with it, I think, until more recently, when you start to see, you guys were talking about Cisco and like some of these debt offerings. That's not great. We've been paying for it with cash, so to speak. But when you start getting more into the debt stuff, that's not exactly what you necessarily want to see. That's
boring. But so when we think about all the data that you just laid out, okay, I think there's two ways you can go. Both make sense to me. You could justify the valuations for the biggest, best companies in the world, like Blake's pointing out, or I look at that huge divergence in terms of the valuations of Mag 7s and the rest of the market, and I think immediately to a zoomed out chart of tech relative to the S&P 500 struggling at these dot-com bubble highs. So maybe it is the right time to take profits and reduce your overweights in the biggest and best stocks and share some of that love with the broader market. Which way do you go from a positioning standpoint? Are you leaning in one of those two directions?
Yeah, I think we've had 3 really strong years, and I think everyone gets their turn at the punch bowl. JC, I hear you talk about, the rotation all the time. I think it's reasonable to just say that other areas of the market need to catch higher. We have not seen that, so that's not been great to see. Where it's the leaders catching down. It's for as long as I've been investing, it's been the opposite. It's always the laggards catching up to the leaders. But I also think that you have to, if you guys go all the way back to like the first slide, I think the recent period, at least through sort of my lens and view of the world, if you guys talk about the Fed talking the market down, that slide, I think the Fed is really going to have to sort of step in here to get the markets back rallying higher. If you essentially overlaid this chart, which shows what the percentage probability of a Fed rate cut is in December,
it was closer.
If you
to 100.
overlay this with the S&P, they're basically in lockstep down. So I'm not necessarily saying that this is the only thing that matters, but if you look at the market and sort of tease out what the price action has been, the market essentially peaked the day of the last Fed meeting when Fed Chair Jerome Powell said that essentially the December cut is not a foregone conclusion. So I think the Fed Chair has sort of hawked up this market. We were expecting 3 cuts at year end. We've gotten 2. We'll get hopefully the 3rd in December, at least according to the dot plot, which is, again, itself somewhat meaningless. Yields aren't really climbing higher at the long end. They are moving a little bit higher at the short end. So I think this is sort of where that indigestion started. The dollar's been a little problematic. Again, some of these tech names had run so much. So I think the market is just sort of repositioning itself. I think tonight, NVIDIA is hugely important. It's hard to call the bottom. So if you go down, I know you guys were looking at a little bit of NVIDIA data, but go down.
Hold on.
Yeah, I'd love to see that. Yeah.
This is such a great chart. I mean, if someone were to ask me what is the single biggest reason for the recent volatility or selling pressure, it's totally this. You're right. We need to overlay a chart, S&P 500 price, with the odds of a rate cut and the way that they've absolutely collapsed.
And then just go to the next slide. You can see that this completely. Oh wait, go back. Sorry, I know we're flipping all over the place. But like when you think like the Fed talking down the market and like how that's flipped sentiment.
Blake never skimps out on charts. Blake brings it.
No, you're bringing it hot. Yeah, I like this. I like this, Blake.
You see this?
Dude, your charts are so much better than your microphone skills. You know what I'm saying?
Hey,
all right, what is?
I got a lot of shit. My whole house is under construction. I got to go to physical therapy at 10:30.
The office looks good though. You're looking sharp. You know.
I don't know if you can zoom out, but I got 2 very important football helmets. But we got a.
I don't know if you guys could tell,
Maryland.
but there's a CFA diploma there.
I don't know if you can tell I'm a very important man. What is
important man?
Reading
That's a hard exam. I couldn't pass that shit.
What is
it
this?
Wasn't fun.
We flipped full bear, full extreme fear in a matter of 2 weeks.
Yeah, I mean, these are again sort of off-the-shelf measures, so they're not exactly perfect, but it does show that the mood has clearly swung from a little bit more exuberance off like the really strong summer that we saw, some of the fall. Yeah. And I think this helps set up a nice year-end rally. I think the market definitely, like when you talk about the technicals, like there are some key groups that need to start showing up, I think, sooner than later.
Homies.
Financials, industrials.
I mean, check all those boxes and more. So now, of course, if you go to the next slide or two and you look at NVIDIA.
I want to talk about year 4. What do you think about this case that this is year 1 of a bull market?
Yeah, I think I saw something that you had mentioned. I actually laughed when I saw that. I didn't read what you wrote.
You and everybody else, Blake.
No,
but for the record, I laughed too. For the record,
look,
just to be, I'm with you. And then I got convinced.
And this is what makes a market. We can all look at the same data and we can come to very different conclusions. We all come from different experiences. We all have like different, imprints in our systems as to like how we were raised, things that we value, time horizons, risk, like all that kind of stuff. So we come to the market in very different ways. I don't know exactly what the rationale was behind year 1, but like I would assume it had something to do with the reset around liberation. You got like a new momentum.
It was mostly the breadth reset. You fell below 20% of stocks above their 200-day on the New York.
That's what I would have guessed. So some sort of like new momentum breadth regime, but we were still sort of in that from 22. We had some Zweig thrusts, I think, in 22, 23. Did we end up getting another Zweig thrust in April? I don't know that.
There was a lot of thrusts. I'm not sure if Zwat
There you
made
go.
the cut, but there were a lot of them.
So
We were thrusting.
I understand what you're saying. It could just be a massive correction/bear market within an ongoing cyclical trend. In any event, I will continue to mark sort of 2022 as the low. I know you guys have done the work on the internals. You guys thought sort of it bottomed more in June. The index level, it bottomed more in October. But here we are. We're past 3 years. So now we're getting more into like mid-cycle type behavior. Again, we've had 2 back-to-back 20% years. I would expect this year will come in probably 15-18%. I think we rally into year end after all of this. I think this washout kind of really helped reset the table for the next 5-6 weeks. The data that you're looking at, if you look at the big red box in the middle of your screen, obviously that's year 4, but you look down. So look at the averages, the min and max. Essentially, in the 6 of the last 7 bull markets that reached year 4 have been higher a year later with, average median returns of essentially like 12-13%. So those are more or less around averages. So this is not necessarily a reason to pull back on your exposure. I think you have to really listen to what the market is doing. I'm really paying attention right now to the labor market. But whatever it is that you are watching, just continue to keep a close eye on it because, again, we are mid-cycle. It would not surprise me if we take a bit of a breather and consolidate sideways. But at least according to history, if you're using that as just a guide to help you understand what things have happened before, not necessarily what this will happen in the future, but it's not necessarily a reason to get out of the market or be nervous. So, and in terms of time, so there's obviously the price component and the time. So I think like the median number of trading days for a bull market is something like around 1,000 days.
Dude,
we're like 3/4 of the way there. There's room to run.
I'm a time guy too. I'm with you. Henry in the chat saying Todd Stone said it wasn't a bear because it didn't drop 20, only dropped 19. Ari Wald uses a nice timing where Ari Wald looks for 18-month lows to define those bear markets, which I like. And again, I don't know, right? None of us know, right? We're just here trying to think about it and figure out, trying to like put things into context. But Hurley, watch the video, Spencer. If you could drop the link to Hurley, and you should watch it too, Blake. He makes great points, and he wasn't even including the sentiment reset, right? He was just talking about the market of stocks and breadth, making great points. Now, when you add a layer of sentiment on top of it, again, it's hard to argue. I mean, I guess we'll see what happens, but just a very, just a solid conversation from, just a legend. This is a guy who won the Lipper Award in 2008 for the best mutual fund manager in the hardest year ever. So, the guy's got some street cred, good friend of ours. And I laughed too, Blake. I'm with you, brother. And again, the timing of it, the timing aspect of it was part of that. But I don't know. I'm trying to keep an open mind. Right?
Yeah, it's interesting when you talk about these like near misses of these like textbook, like say you get to 9.5 or you were mentioning like 19.5%. So like, it's actually interesting. I wrote a blog post on this like about a week ago of year 4 of the bull market. And I got a response. Ryan Dietrich reads my newsletter and he responded to me just saying, he's like, I don't understand why you called this year a bear or bull or whatever, because it didn't hit the 20. And we were kind of going back and forth being like, listen, like you and I can debate this shit all day. Like to my mom, like the world was ending in April. So like, yeah.
My mom was literally calling me asking if she should liquidate her 401k. I swear to God, my mom was asking me that. Shout out to mom.
Yeah. So like we all can pick and, we can parse this data till we're blue in the face, but like sometimes it's also, I understand you need it for like data and charts and tables and establishing different regimes and levels and all that. But like sometimes you also just have to like step back and just be like, all right, what are we actually talking about here?
Yeah. We're trying to put things into context and then we attack. Like, am I going to sell my biotech stock because valuations are high, in the market, or am I going to like, right? You want to trade what's in front of you. So that's it. All right. Final words of wisdom. You're looking for a year-end rally. You think we're set up for it. What's going to be the best sector between now and February 1st?
February.
Yeah. You always get that spillover into January. So that's what I'm thinking like that.
I think you probably get a rotation back into some of these names that have taken the breather over the last month. I don't know if they push all the way back to new all-time highs, but it really would not surprise me. Again, I think
like discretionary has been the worst. Like, you think it rotates into discretionary?
More of the offensive group. So that financials have gone essentially nowhere in months. Industrials, same thing. So like a lot of the more like leading groups that you'd want to see, I think they need to start kicking into high gear. Like I said, I think NVIDIA is really, really important. It's been sort of a leader of the market for the last 3-4 years. So I'm not even really looking for what it does today, but it's more the reaction in the next couple of days. And I think that will be hugely important for where this market might go. But yeah, there's all sorts of tailwinds here into year end. We know seasonally this is a very strong part of the year. The corporate buyback window is about to reopen. Managers are, as they always do, they underperform. So like they're placing the risky bets, trying to chase. And where do a lot of those gains come from? It's probably the names that have worked for a long time that are more just taking a breather now. So it would not surprise me at all if some of those names catch that bid year end and we get that chase.
Yeah, I think so too. Mr. Blake, I appreciate you. Where can everybody find you? At Blake Millard CFA.
Yep. That's me on X or Twitter or whatever the hell we call it these days.
And we got one more thing. So we're having a Michigander week this week. How many years did you live in Michigan?
Just 4.
Just 4. Does that count? Are you officially a Michigander, or is that not enough time?
I mean, I went to college there. I've dated girls there. I've gone drinking there.
Didn't you marry one from there?
Wow. No, my wife is from New York. She's I'm Chicago. She's New York, and somehow we met and live in DC. Well, we're in a suburb of DC, technically.
And then can you do the hand thing? Where is the
not doing it?
You're not doing it. You're not officially a Michigander.
I just always thought it was the most ridiculous exercise.
You hear that?
Ann Arbor's tucked very close to the Ohio border. I can tell you that.
Definitely not a Michigander. Definitely not that.
Yeah, I'm from Chicago.
Right? No, I'm asking. All right.
Yeah.
Tell me there's a better looking helmet than this.
Dude, Chicago. My high school had the same helmet. You know that? We were the Wolverines.
Really?
Yeah.
You had the stripes?
Same stripes, the baseball uniforms, the whole thing. Yep.
Nice.
Yeah.
Good colors.
We don't have a hockey team. Cubans in Miami don't have hockey teams. But if we did, it probably would look like that too.
I can't imagine you playing hockey.
I can't either. I don't want to do that.
Would love to see it.
No. Nobody wants to see that. Nobody wants to see that. All right, Blake. Appreciate you, my man.
Thanks, guys. Great to talk.
All right. JAK hating on crypto. Clearly he's not reading ASE crypto, because if you did, you wouldn't be such a troll, and you would be thankful at all of the money that Louis helped make over the years. So you must clearly not be a paying member. You just must be one of these schmucks who has no life and just likes to troll. Losers. What a loser, that guy, Jay. Get him out of here. Get him out of here. You suck. Do better.
All right. And on that positive note, let's all get out of here.
Louis has made us over the years.
Let's all get out of here. Let's all get out of here. We got a lot going on today. I don't even know where to start. Sean, what are my options going live at noon? Oh, forgot to mention JC is going live at 12:30 with Vaz. I will drop the link in the chat. And Jeff Mackey going live at 1:30. We got Riley, who was supposed to be on the show today. He'll be on the show on Friday. He's going live at 5, talking about Dubai. I don't know. He's always talking about crazy stuff. It was
what's so crazy about Dubai?
Flying cars last week or 2 weeks ago, and Dubai now. I don't know. I like his stuff because he's always he's way out on like the when he's on the frontier. That's his thing. So I don't follow any of that. So I get all my stuff. I get all my knowledge about this stuff from him. So that's today at 5. Busy day on the channel. A lot going on. Thanks for watching, guys. Go make some money or protect your money. That works too. And we'll see you tomorrow. All right.
Adios. YOLO responsibly.
Good luck.
Always.
I think I'm buying China today. I think I'm gonna buy some China.
I can't take no